Welcome to a episode of Unlocked Performance. Specifically today, we are honored to be joined by Edmond Ade. Edmond is a certified financial planner, qualified development finance expert, trained in the UK, Cameroon, and various other places, I think including South Africa. I've had the pleasure of knowing Edmond for a number of years now, and I thought his input on the topic of financial joy would be an important one. And I'm honored to have you join us today, Edmund.
Thank you so much, Patrick. It's always an honor and a pleasure to have this chat with you. I'm looking forward to this one.
Amazing. And Edmund, firstly, did I leave anything out of the introduction that perhaps you'd want to add to our conversation?
I think you pretty much covered it, right? Let me see. Just trying to figure out which area would make a difference. Well, I guess the financial planner, the certified financial planner qualification is quite important. I obtained that about 5 years ago. It's important to specify that I was in the industry already, working as a financial advisor for quite a number of years before eventually qualifying as a certified financial planner. I managed to take the board exam of the Financial Planning Institute, and um, I- at the time I took the exams, I actually had COVID. In fact, the week I was writing the exam, I had COVID. But I decided to
Sure.
write the exam anyway, and I had one chance to make it. If I didn't make it, I had to go study a postgraduate diploma in financial planning. So I think that is really part of my journey, how passionate I am around this
Hmm.
conversation on financial stuff and getting myself properly equipped to be able to advise everyone from the least to some of the most sophisticated. I think that certified financial planner qualification in South Africa, obtained 5 years ago, is relevant. But of course, in
Yeah.
financial services in general, I have been in since graduating from university back in the early 2000s. I've been in financial services all my life, so more than 20 years of different financial services experiences in Cameroon, in the UK, and in South Africa, and now doing a lot of Pan-African work as well.
Okay. Can you then perhaps then share a bit about your journey? What drew you to your work within the financial services? Um, Tracking maybe a little bit of that journey through the various elements of financial services, arriving at where you are at. Can you share a little bit about that journey? What drew you to your work?
I think the journey is purely coincidental, if you ask me. I mean, growing up in Cameroon, back in the days, it was really a question of finding something that gives you a job as soon as possible. I mean, given the circumstances of that economy, growing up, I was passionate about the sciences, mathematics, physics, chemistry. That's what I was excelling at secondary school. I think you guys call it South Africa from grade seven or grade seven. But with us, we call it secondary school. So from secondary school to high school, it was always about the sciences. I was very passionate about those. So my dream was always to become like a chemical engineer or some kind of engineering. There was always the thought about being an engineer. But post advanced level, I had a gap year. During that gap year, I ventured into a few things, did some work, different things just to amass some resources to be able to then get into university. So at the time I was supposed to go into university, my elder brother who had gone to the university before me a couple of years before, actually recommended that I go study accounting. And the thought was simple. Get in there, get the accounting degree, you get a job after that as soon as possible. That was the thinking. There was no vision around it beyond that. After studying accounting in Cameroon, the very first job I got after university was in a microfinance institution. So that's really how I started, venturing into financial services. Because with an accounting degree, you could work in different industries. It just so happened that I joined a microfinance institution. And in those first few years of working as an accountant in a financial institution, I started to understand a lot of issues around finance, started to get a bit more insight and understanding so many different things that were happening to people as they make those individual decisions, how people struggle to repay debt when they get them. So those things started to really, pique my curiosity around, whether those were sustainable ways of people living. And then 3 years after that, I went to the UK to study development finance. I think that's where it really cemented everything around, getting that vision to stay in this industry. Development finance opened up my mind, opened up my horizons around the different dimensions to how we develop countries in Africa and most other developing countries in the rest of the world, in terms of financial sector development, private sector development, so many different things that we need to do to make sure that we can uplift the standards of these countries. So that helped. But post Manchester University, I then joined the Royal Bank of Scotland in the UK. Again, customer advisory work. And 2012, when I moved to South Africa, I joined this brokerage, which really opened up my mind completely around the different challenges in the financial services sector and what that means for individuals. So that's really how the journey has been. And I guess over the years, as I have learned and amassed a lot of knowledge around different aspects of financial planning for individuals and for companies, I've developed that passion. I've realized it's a massive, massive deficiency in financial literacy across the globe, but even more so in Africa. And that has really now driven, that vision and all of what I do now to try and see how to contribute to empower the people. So that's kind of the journey. It was never planned, purely coincidental. I guess one could say God directed me on that path and that journey.
It's amazing. And they do say hindsight is 2020. Looking back, do you now see the common threads as to why you are in this area?
Absolutely, yes. Absolutely, yes. I see, I have a bird's eye view right now of the different dimensions of financial literacy. If you talk personal finance, I can talk about all kinds of issues around personal finance and how that impacts individuals and families. If you talk corporate finance, I can also talk about how, the different dimensions to corporate finance, financial management, and how that also impacts those companies and their owners and of course the society at large. So I really am blessed to be positioned in a space where I can wear these two hats at any time. I can put one on or the other, and I can see the linkages between the two. I mean, because they're not really kind of separate. Companies are required to create jobs.
We can even say three hats, because you have the development finance at a so you have the individual, you have the organizational, and then perhaps you can even say, because of the development finance, you have the macro states or even across states sort of view as well, Edmund, which is an extremely powerful set of
I'm glad you mentioned
skills.
that, I'm glad you mentioned that. But the way I see it is that, yes, the development finance component, what it really does is it brings the two together. Because if you think about it, economies are driven by two things, either macroeconomics or microeconomics, right? So if you look at the micro, this is at family level. And then if you look at the macro, it's really at societal level, but typically it's also made up of companies who are part of that macro. So then, yes, so you can sit on top and you can see the micro issues and linkages that are causing different dimensions or different issues around the economy or the whole country. And you can look at the individual things happening at company levels or firm levels or sector levels, depending on the industry, and how those contribute as well to either developing or underdeveloping the country. So there's the two meet at the apex, and then the development finance hat, which is really the course really gave you a sense of analyzing things from a policy point of view. So you can look at it from a policy point of view, from a regulatory point of view, from a societal point of view in terms of how these different levers are contributing, to the growth and development of the society. So yes, it really has positioned me really strategically and uniquely to be able to have conversations in those different areas.
And tell me then, this background focus now in what you do around being a certified financial planner and also being a if I'm right in this understanding, also taking that development finance angle and helping organizations raise capital. So what would you say in terms of, in both elements, I suppose it's very joyful to have people, to get funding, I suppose. But then in terms of perhaps on a personal level, with a certified financial planning for families and organizations, for individuals, families, and organizations, how do you see that work contributing to joy in the household, contributing to joy for the individual? Um, yeah, and if you can bring in some examples of one or two things that cases that come to mind as well to illustrate your thoughts.
Yeah, absolutely. So, I mean, on the personal financial planning level, what you find, those who really take the time to work with a certified financial planner like myself would ultimately have a very well detailed and well analyzed financial plan that covers all the different dimensions of their personal circumstances. It's very bespoke. It's a very consultative process, which takes into consideration the individual's objectives, the individual's personal circumstances, the individual's priorities, and it tries to um, you know, plan for different eventualities. So it considers different possibilities. For instance, it takes into consideration wherever you are at a particular point in life, what are the potential risks that you can face, and how can those risks be mitigated or transferred, or insured or managed in a way that would be less catastrophic if they occurred. If, for instance, in the event of death, in the event of a disability, in the event of a critical illness, there are potential implications for that. If it happens to the breadwinner of a family, that could mean there's absolutely no more income coming in. How do you ensure that if that kind of thing happens, the family is well protected? So that's the first dimension of the kind of analysis that we do to be able to make sure that the family has that baseline protection or downside protection, really, if you want to call it that. Then you start to go to the next rung, which would be about planning for short, medium, and long-term objectives, whether it is planning to buy a new car, planning to get into a new home, or planning to send kids to tertiary education. Those different kinds of priorities can then be looked at, and we set up adequate plans that will be able to meet those different objectives. Then there's a very long-term plan as well, which is about retirement planning, ensuring that you're keeping something aside for um, for your retirement, and ensuring that you're able to imagine what the retirement would look like, what you want your retirement to look like, and then putting some plans with clear strategic objectives and key action points to be able to get to that. So that would be your traditional journey for most people. But of course, we in society now, there are other kinds of non-traditional families and non-traditional setups, which require completely different thinking. Those who are entrepreneurs who may not have consistent cash flow, the way you do their planning will be different. There are also people that would probably have, probably made some mistakes, especially in this consumerism dispensation that we are in, where people tend to get into debt to buy cars, debt to buy homes, and debt for consumer spending on credit cards. You find a lot of clients as well who are probably at that stage where they need more of debt management, to try and get them out of the debt management before they start to look at these other dimensions. But whatever stage a client is or an individual is, there's work that can be done, and you can take them from a certain point A, which typically is not a good place, and to a point B, which is a much better place. Or if they're already in a good place, then you can take them to an even much better place. So either way, it contributes to the joy because it gives them one sense of peace of mind, knowing that a lot of things have been, catered for. There's plan in place to make sure that if certain things go wrong, there are some protections in place. Then, of course, there's a sense that their future is assured. It may not be 100% assured, but to a certain extent is properly covered. All of those things add real, I believe they add real joy. They add joy, they bring joy, right, to the individual, or they bring peace of mind, and that peace of mind translates into joy, which I think is a key thing that we do. In terms of examples, of course, we are in a very, very regulated environment. So client confidentiality is obviously very key. So we tend to obviously not discuss client cases, in public domains or even in private, except with the client. But I mean, in my client base, I've seen single mothers who have been able to put in place a plan that caters for their kids, even if they are not there. So if something happened to them, knowing that there's probably nobody else to take care of the kids, being able to put in place plans that can ensure that there's a proper guardianship situation in place, there's adequate provision for taking care of the kids' education right up to tertiary education, whether they are there or not. There is a plan in place to just give those kids a future as a baseline. And then there is also additional plan to take care of themselves, because if you're single, you still have to take care of yourself. So there's also a plan to make sure that the breadwinner is also well taken care of. So in that particular area, I've seen a lot of transformation. We are in our society these days, we have a lot of people, a lot of single mothers, a lot of single home family, I should say, but of course, the majority of them happen to be women looking after, these children, and often the men not not involved in this, and these women have to look after a career and look after a family. They need someone that can really help and assist them in putting in place proper plans to cater for these things. And I'm seeing a lot of that in my practice, and a lot of transformation I've seen in that.
Apologies, Edmund, for that interruption. I thought I had put
No worries. How do we proceed?
I thought I'd put the meeting on the backup source that I have, which is more reliable, but it must have switched to the unreliable but faster connection, or maybe I didn't. I don't know. How do we proceed? Well, we'll cut that out and we'll seamlessly bring it together. I think you were finishing off on the sense of peace of mind, and through peace of mind, joy. And saying that it was that there's non-traditional context, for instance, entrepreneurs, for instance, those who are maybe more in the debt aspect, and you're just landing on that in terms of saying overall it's about getting from A to B, whether it's not a good place to a better place, or from a good place to even better place, and that's where you landed off as we were finishing there. Sorry, as
Okay.
technology finished us.
I don't think, okay, you didn't capture the example I gave then, right?
No, I didn't capture the example you gave.
Okay. Okay.
Yeah.
All right. So anyway, let
Oh,
me
no, no,
see
no,
that.
no, 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 no,
Uh-huh.
no. The example about the single mother who
Yes.
you gave, yeah, yeah. You were saying about that. You had a plan for her, but you didn't have to go into specifics. You were saying that you can't do that, but in terms of that, the emotional element of the peace of mind that she got, perhaps you can land on that. I don't know if that's where you were going to with that anyway, but that's what comes to mind. So she had this plan of action to protect herself, protect the kids particularly. And is it something that gave her a measurable peace of mind? Did you see something like that? Or was it something where, in fact, you had to actually implement the plan because she had a emergency. I don't know where you're heading with it, but that's what's coming to mind as to, bringing the story back to your point of peace of mind slash joy.
Yeah. Yeah, I think what one could add to that example really is how detailed the plan, was. For instance, there were very specific questions around she has two kids, one boy and one girl. So there were specific questions around where do you see these kids studying? One was 15, the other one was 9. And there were questions around where do you see these kids, studying? Do you envisage them studying in the US or out of the country? I mean, out of South Africa at some point or not? And if so, do you already have an idea of what they probably will be studying? And if so, do we have a sense of what that course will cost in today's terms? And how can we then plan for that such that whether you are there or not, that plan will be achieved? So
Mm,
there are two dimensions to that planning. The first part is that if something happens to her before the kids get to the age where they get to tertiary education, in the US, in this case, they're considering education in the US at MIT. And it was a case of, okay, if something happens to you in the next 1, 2, 3 years, and the child is not yet able to get there, what should we put in place to make sure that in that situation the kids will still be able to attend these courses at the time? And then secondly, is if you are going to live beyond that, we're hoping that that's the case, then how do you invest or keep enough to make sure that you pay for the kids' education yourself? So there are two dimensions to that planning. A part where if you are not there, you know that there would still be adequate provision made through different kinds of financial planning solutions. And the other part, which says if you are there, which is typically what you expect, then how much should you be saving and investing, and in what kind of investment vehicle, and what kind of actual investment should you go into to make sure that the particular objective will be met? And that objective is quite defined because we estimate what the cost of education is in today's terms. We factor in education inflation, which is different from general inflation. We factor in different kinds of investment returns that you can expect depending on the risk profile and depending on the kind of risk that the client wants to take or the kind of investments we go into. We look at the historical performance of these investments, and we use the growth rate that they have achieved over the last 10 years to project how much that investment would be by the time the child gets to year 1 of the university course. And we estimate in total how much should have been contributed to take care of the child for a 4-year course. In this case, it was a 4-year course. And then you work out a plan that would ensure that if she contributes a certain amount of money monthly, it will achieve that number. So that's how detailed the plan is, and backed by different assumptions and different conversations around attitude to risk, around understanding of investment markets, around time, because for the 9-year-old, it's a different plan to the 15-year-old. They are at two different stages, and the amount of money required for each of them will be different because of the difference in time. You'll find that within 15-year-old, you needed a bit more money to be saved aside because the time to invest is shorter. And for the 9-year-old, it required less money, which just highlights the fact that the earlier you start these things, the better. But ultimately, the piece that she obtained was how detailed, how specific, how bespoke the plan was, and all the different thought processes that went into that planning to achieve something that's quite elaborate. And she was able to take that and put that in the family vision board and took that to the kids and explained to the kids what she had put in place as a plan for them. And she also used that to start to do some financial literacy conversation with the children by saying, because of this plan and the different commitments that I've made to make sure that this plan happens, whether I'm there or not, it means that we may have to start saving up on other things. There may not be a usual family outing on a weekend as we used to have, because we need to save up a bit more to ensure that your future, the future for both of you, is actually secured. And that, would obviously give her a lot of peace of mind, knowing that there was a plan like that in place, because the kids were her most important concern.
Mm. Peace of mind, but not only that, she was able to share it in a way with her kids in terms of, you know, getting them to start learning about these things, about financial planning, getting them to make some sacrifices together on like a family financial planning in a way. We are doing this together and getting, yeah, it sounds amazing. What were some of the results there in terms of, the words that she shared that all of this led to, in terms of emotional impact, in terms of, you know, transformation in the family, having this plan. Um, Clearly there was some cutbacks here and there from what you're saying. But it doesn't sound like it was not joyful. It sounds like it was a joyful process in some way. Can you maybe just in wrapping up on that, can you maybe share a little bit on the impact of this very bespoke plan?
Yes, I think if I'm trying to recall some of the conversations I was getting from this lady, the first thing was how involved she was in the process. I think that's one of the things that made a big difference. She was very involved. It was very detailed and earmarked for her case. You could see that it was not one of those things was taken off a shelf. This was a process where she was very involved. We're asking a lot of prompting questions that made her to think deeply about what she wanted to achieve. Some of those questions were things she had not even thought about them before. And so you ask these prompting questions and you see she go, oh, okay, I had not thought about that. But now that you say this, I can see that this can happen. So yeah, that's something we need to take into consideration. So you could see her eyes lighting up, with empowerment, because she felt really empowered to know that this is a plan. She owns it. So another big one is ownership. I think that's something that everyone must know. They have to own the plan. I always tell my clients, it's your plan, it's not my plan. My job is to coach you through that. C is to bring in different dimensions to the conversation around whatever we do. For instance, is it tax efficient, or have you thought about this possible scenario? That's my job. I bring out all these different possibilities, and then it's for you to tell me as a client whether you think that is applicable in your case or not. And then we discuss that, and then we incorporate that into the plan. So that process means the client owns the plan, and it no longer became a case of just taking up an insurance policy, but rather taking up a solution to meet a very specific plan for her circumstance. So that in itself, it also felt like she wasn't just buying products, she was implementing solutions for her long-term financial security and that of her children, as well as peace of mind.
I hear you. I hear you. Hmm. Amazing. So, what would you, to anyone listening to this, what are some things for financial joy that they can already, maybe what simple steps would you recommend that people take to have more financial joy? I'm sure in there is probably speak to a certified financial planner, but amongst the steps, including perhaps leading up to speaking to a financial planner, um, what 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 would you hope to see from someone who wants to come and see you so that you can help them help themselves? Does that make sense?
Yeah, it does. Absolutely. And look, you're spot on about the fact that I was going to say speak to a financial advisor, but I think I can qualify that even more. the relationship between a financial advisor, a financial planner, and a client, it's deep. It's much deeper than just a transactional relationship. It's someone that you open up a lot of different aspects of your life to. Just about everything we do has financial implications. So, which means it's not a decision you take lightly. You know, you need to find there are so many different dimensions to the kind of person you want to work with as your financial advisor. It's a long-term relationship. So it means it's almost similar to some of the things you do if you want thinking about getting married to someone in a way, because it means you need to find out, I mean, how are you compatible with this person? Can you relate with them? You know, what is this? What is the synergy like? So there are all kinds of things that, and then on top of that, there is the competence levels. We have all kinds of financial advisors out there, but the ones who are certified financial planners have demonstrated through rigorous study, through a lot of experience, and through signing up to code of ethics that they really are passionate and professional about this. So someone who actually is at that level is usually much better to work with because they can really analyze different dimensions of financial planning and be able to craft, you know, proper plans for clients. So I would say get someone you can work with, can relate with for the long term, but also someone who is competent and who is compliant, and preferably someone who is independent, really. Independence in the sense that they have access to multiple solution providers such that they don't just sell you a particular product, but they'll rather take the time to look at different options and then, you know, find a solution that is most suitable for your circumstance. So those three areas would be that first step, just finding the person to work with. Then, of course, the next thing as clients would be to self-educate as much as possible on financial things. I don't think a lot of people invest enough time in understanding different aspects of finances. They may not get to the detail, how detailed someone like myself would be, but at least get some fundamentals. Then, in terms of day-to-day actions, what are some of the things people should be doing, which can then be enhanced by working with a professional like myself? I would say, of course, the first one is budgeting. I think a lot of people just don't budget. And even when they do budget, it's really just a checkbox exercise. The budgeting process is a bit more detailed than that. So it's about, yes, I want to spend this much this year, you know, for this, and this, and this, but you have to go even deeper to ask yourself questions around needs and wants. I think that the budgeting process, you know, people need to start thinking about that. For instance, you need a car, but what kind of car do you need? You know, and that can make a big difference whether you go to buy a 200,000 rand car or you buy an 800,000 rand car. The difference is 600,000. But what are you buying for that difference? And that is how deep I expect people to start to think about the budgeting process. The decision of the house you buy and the suburb that it's based can make a difference in the price, but not necessarily a difference in the house. I mean, you could probably find a 3 or 4 bedroom house in Santon would be a different price to that same house in Randburg somewhere. So that decision has financial implications. So just from that very fundamental behavioral perspective, start to really question what is it I'm buying over and above just putting numbers on it on a spreadsheet as a budget is important in the budgeting process. So that's something else that I believe people need to be looking at and getting more education around. I call it the cost of show off. I say that we do pay a lot for showing off. And that comes in different ways, you know, buying branded clothes or, you know, or having to buy a certain kind of car when you probably don't need to, or live in a certain house that you probably don't need to. Those things have serious financial implications. And I think we need to get to that point where people can start to realize that they can be a bit more minimalistic in different ways around how they do their budgeting. Then once you've got those basics, you have a good foundation to be able to start working with someone like myself to put to get in place proper plans, whether it's for planning for insurance purposes, whether covering in the event of death, disability, critical illness, those
Mm.
kinds of things. And then, of course, ultimately investing, because you will not be able to put those things in place if you don't have any excess income. And currently,
Yes.
what's eating up that excess income? It's just that budgeting process and that discipline around it. If people can do that, they start to get a lot of disposable income, which then allows them to do all the additional things that ultimately bring a lot of joy.
That's a powerful one. And I think two things just come to mind in terms of you know, happiness versus joy, Edmund, which is you can invest in things that ultimately bring you short-term happiness or feelings of pleasure, but which ultimately take you further away from ultimate joy, which is having a plan that, serves you and your family into the future. And which doesn't say that you don't have to enjoy life. I must say, and I think maybe this is part of maybe people's fears around budgeting, that it means that they can't spend. You become like a monk. It means you need to be a monk. That's not what you're saying, is it? I think what you're saying is that you just need to be mindful. You have to give your every cent a job, and some of that job will be relaxation, leisure, because that's human. You can't not have some of that. If not, you can't stick. You probably won't be able to stick to the plan. Is what I'm. But maybe I'm adding a little bit into what you're saying. But what I'm hearing is that the goal of a budget is to have a surplus. And it means that if unfortunately you have to cut back, you then find ways to do so, whereby if for instance you talk about a need, like a car, you need a car for your work, then what kind of car do you need? You know, um, if the car that you have is taking you into debt, is that the car for you? And
Absolutely.
it's different for different people. Because
Yes,
at some level, a very that car doesn't make a difference. But something else that they're spending a lot of money on is actually, even more money on perhaps is where they need to make the adjustment. So so this powerful thing. What should be the saving rate? What do you think people should set aside for savings and investments?
I mean, there are different school of thoughts around that. I think that, I mean, there are people that say save 20% and then spend 80%. You can't put a rule like that, in societal issues because for some people, 100% of their income is not enough to take care of their fundamental needs, right?
Mm,
So for
mm,
someone like that, you can't go to them and say, still save up 20%. I mean, the 100% is not even sufficient for certain basics. And we're talking really very nominal basic, right? So for an individual like that, it's a completely different conversation. For someone who is earning way more and is obviously having way more income around that budgeting process then comes in. And for me, the goal is to be as much as possible, right? It's to save as much as possible without compromising on a certain lifestyle. Now, what determines that lifestyle? That's where individual preferences come in, right? And I like the way you put it before, where you say you're budgeting for to have an excess and not just budgeting to account for what you've received, because that's what a lot of people do with their budgets now. They just account for what they have received and how it was spent. But rather, you want to budget by really being intentional, disciplined, and questioning and mindful about what you're spending and what is driving that decision. Is it driven by ego? Is it driven by necessity? Is it driven by comparison with the Joneses? Those behavioral things you need to start to ask. And then I would not put a percentage to how much you should save. I would rather say define your lifestyle properly, and then see how to meet that lifestyle that you've defined with your income, with a minimum percentage of your income as possible, and the rest should now be invested.
Powerful. Thank you. Thank you so much, Edmund, for sharing your expertise and your views. Very helpful. Um, I think for me, then the question I like to ask is what brings you joy? Overall, and maybe speaking about, financial joy, as well. But let me start off with the overall aspect, first, if that's okay, and maybe you can then add one or two things around what has brought you financial joy. Um, but maybe, yeah. What would you say to the question?
Yeah, so I guess with the different personal development courses and workshops and seminars and just, different upskilling that I've had, for personal development, it's brought me to a place where I have recognized that a lot of the things that we're actually looking for are free. They don't cost money. And I think if we keep seeking external joy or joy from external things, then we keep chasing them and we just never find them because there's always something better out there. You want to drive a particular kind of car today. The moment you have it, you start looking for the next one, and you're constantly on that chase. You just never seem to find the joy. I've come to a place where I realized it's really about understanding the things that are important in life right now. And those things are not necessarily financial. I know people could say, well, yeah, of course, you can probably say that now. uh, but I wish I had this mindset, 10, even 10 years ago. I think I've learned a lot over the years with working with people that are very, very wealthy and working with those that are not wealthy at all and struggling in debt and everybody else in between. And I tend to see the pattern. Typically, you're trying to get that big house. The moment you get it, all of a sudden, it's just that. You just got the house. There's no extra satisfaction. You're going for that car. You drive that car one, two, three times, 1 year. All of a sudden, there's no longer excitement anymore. So those things are temporary. And so the things that I look for that are giving me joy these days are more intangible stuff. They are more profound. And the first one for me is purpose, right? The fact that I'm in a space where I have clarity in my purpose and what I do. I have total conviction that this purpose is aligned to why I was created, why God created me. That purpose is very aligned to that. And that gives me a lot of joy, a lot of um, motivation, a lot of zeal. It keeps me going, knowing that I'm doing something that is actually purposeful. And purposeful means it's contributing to a lot of people's lives. It's changing a lot of lives. It's not just my own life. It's changed my life. It's changed the way I do things, but it's also helping other people to empower them. So that is actually one of the things that give me a lot of joy and peace. Secondly, it's getting to that place where you understand what life is about. We are spiritual beings, so my relationship with God is very, very important, and making sure that I'm always plugged in, connected to the Spirit brings a lot of joy as well. And the third thing really is about what I call freedom. Now, that freedom has multiple dimensions to it. But the most important being the fact that I can choose to do things that I want to do, and I can choose to not do certain things. I can say no to a lot of things. I can say no to a lot of opportunities, and I don't feel like I'm missing out. And I have that freedom to decide what I want to work on, with who I want to work with, where I want to be at a particular point in time. That freedom also means I have a lot more time to spend with my family. That freedom also means I have a lot of time to take care of myself, which means I can exercise properly and thereby looking after my health. And all of those things, contribute to my peace of mind. So if you want to bring the financial dimension to that, of course, because I have defined a certain lifestyle, I am not, I'm no longer driven by the kind of car I drive. I'm not bothered. I could be driving, in fact, I actually don't have a car right now in Rwanda. I don't need one because um, 99% of my time I work from home when I'm in Rwanda. So I don't need a car in Rwanda, so I don't have one. And that means less pressure on my finances. Um, the choice of the house, the choice of the neighborhood. I could live in a particular neighborhood in Rwanda where most of the expatriates live. That would probably cost, a lot more money than where I currently am. But it's still a clean, safe, comfortable environment, close to the kids' school and stuff like that. So all of those things mean that there's a very reduced amount required to keep up my lifestyle. And that means then that there's a lot more disposable income to invest in other things. I can even take more risk. I can even lose some money in certain investments and not feel and not be bothered. I mean, it's not that nobody likes to lose money, but it's that my tolerance to risk has increased. I can take a bit more risk. I can actually be more purposeful with my investments as well. So I choose to look at investing in things that would also bring more impact to the continent. My choice of investments will be in areas like healthcare, agriculture. These are places that we need a lot of investments to be able to bring more transformation. So I'm being more intentional with the excess income I have or excess money I have because I have less pressure with my lifestyle.
Very much then aligned with the theme of freedom.
Yeah.
And knowing that, because you've divorced yourself from some of the external pressures, you do have that flexibility to do the things that matter to you in terms of investments, in terms of lifestyle, in terms of even where you're staying, as you said, you know, having a base in Rwanda now. So, Edmund, I thank you for sharing on this important topic. I'd like to ask, where can people find you and find out more about what you do, to end off? Um, and if anything else, perhaps you'd like to share with the audience.
Yeah, thank you so much. I'm actually, most of the time I'm based in Rwanda, in Kigali, where we're running Premier Private Wealth Rwanda is being set up. So the website is still being developed, but soon that should be live. So for the most part, people can find me on LinkedIn. That's really where I am on social media. I'm beginning to develop a social media page on Facebook as well, so that should come out soon. But for now, LinkedIn is really the space where you can easily find me. In South Africa, we have Premier Private Wealth South Africa, where we have a couple of advisors as well coming in, and we are able to provide holistic financial advice to our clients in South Africa. We also based in Cameroon. I tend to be in Cameroon very often, and so those who want to meet face to face, they can always meet me in Cameroon. I try and do 2 trips a year to South Africa and 4 to Cameroon, and the rest of the time I'm in Rwanda. So I, of course, prefer digital channels to have conversations. I think that that's one of the benefits of COVID, to make sure that people don't have to displace themselves physically to be able to talk to someone. So I'm very open to virtual consultations. In fact, 95% of my consultations are virtual. I think it is better, because you can record it, you can go back to those conversations, and it's very, very, it keeps a trail. So I think there's a lot of benefits there to do virtual consultations anyway. But more importantly, it's flexible as well, and people can consult from anywhere in the world. So I prefer those, but of course, from time to time, some people prefer face-to-face meetings, and I'm able to do that. So Kigali, Rwanda, Johannesburg in South Africa, and in Douala in Cameroon, typically where we are.
And online as well. I think, yeah, probably you should have started there because that's
indeed.
Yeah. Okay, phenomenal. Thank you so much, Edmund, for this.
You're welcome.
And here's to more financial joy on a continent that needs it.
Looking forward to that. Looking forward to that journey and more conversations. Thank you so much for having me.
My pleasure.
Okay.